The stock market experienced unprecedented success in 2023, with indices like the Standard & Poor 500 and Nasdaq 100 reaching all-time highs. However, certain dividend stocks face challenges, potentially due to rising interest rates and the appeal of speculative investments like tech stocks and cryptocurrencies. As global economic growth slows and geopolitical tensions rise in 2024, investors are turning to defensive blue-chip holdings for stability and income. In this video, we explore the intricacies of the 15 best dividend stocks for consideration in 2024. Number 15. Verizon Communications Incorporated. Dividend yield, 6.8%. The telecom industry is poised for a resurgence in 2024, and Verizon stands as a potential beneficiary. Having completed a substantial portion of its 5G rollout spending, the company anticipates lower capital expenditures in the coming years. This reduction, combined with the possibility of falling interest rates, is expected to ease Verizon's considerable long-term debt burden. Number 14. Diageo plc. Dividend yield, 2.8%. As one of the world's largest alcohol producers, Diageo holds a significant market position. Headquartered in the United Kingdom, the company operates renowned spirits brands such as Smirnoff, Don Julio, Johnnie Walker, and Baileys, along with Guinness beer. Despite concerns related to factors impacting alcohol sales, Diageo's stability and recession-resistant nature make it an intriguing investment opportunity. The company's long history of stable operations, coupled with its significant presence in emerging markets, positions it for potential growth in regions like India, Africa, and Latin America. Number 13. JD.com. Dividend yield, 2.8%. Chinese stocks, including tech giants like JD.com, have faced significant challenges in recent years. For example, the Hang Seng Index has experienced a substantial decline, reflecting a broader trend of capital flight from firms tied to the Chinese economy due to geopolitical uncertainties. Number 12. CK Hutchison Holdings. Dividend yield, 7.3%. CK Hutchison Holdings, a Hong Kong-based investment company, has diversified interests in retail, telecom, infrastructure, and seaports. While geopolitical tensions have put pressure on Hong Kong-based businesses, CK Hutchison's global presence, particularly in the seaport business, offers unique opportunities. The company controls 293 berths in 51 ports across 25 countries, making it a significant player in the sea logistics industry. The company provides investors with an attractive 7.3% dividend yield. While there are inherent risks associated with Hong Kong-based businesses, CK Hutchison's diversified portfolio and growth potential make it an interesting consideration for investors seeking both growth and income in 2024. Number 11. Wells Fargo & Co. Wells Fargo, once tarnished by fake account scandals, has undergone significant transformations to restore its reputation and financial health. The bank faced regulatory consequences, paid substantial fines, and appointed a new management team to lead its recovery. Under new leadership, Wells Fargo has taken measures to reduce costs, resolve regulatory matters, and improve profitability. While the bank recently reported quarterly earnings that fell short of expectations, it outperformed many rivals on key metrics. Wells Fargo has resumed regular dividend increases and substantial stock buybacks, signaling a return to financial stability. With a dividend yield of 3%, Wells Fargo presents an opportunity for investors seeking exposure to a recovering financial giant. Number 10. OnMain Holdings Incorporated. Dividend yield, 9%. OnMain Holdings, a financial services company specializing in consumer finance, has a history rooted in Citigroup before becoming a publicly traded company in 2013. The company's focus on personal loans, both unsecured and secured by collateral, has allowed it to navigate through prior economic downturns successfully. Its shares are currently trading at a low valuation, approximately 6 times forward earnings, as investors express concerns about a potential recession. While credit metrics have seen some deterioration across the industry, OnMain's high profitability and proven resilience make it an attractive option for investors looking to capitalize on the uncertainty. With a generous dividend yield of 9%, OMF stock offers an enticing income opportunity in 2024. Number 9. Duke Energy Corp. Dividend yield, 4.3%. Amid a renewed interest in nuclear power, Duke Energy stands out as a leading power utility focused on the southern region of the U.S., the company generates a significant portion of its electricity from nuclear sources, operating 11 nuclear units across 6 sites in North Carolina and South Carolina. Duke's emphasis on nuclear power, accounting for about half of its total electricity for customers in the Carolinas, positions it favorably in the current economic landscape. Investors have questioned the economics of wind and solar investments, leading to increased value placed on Duke's massive and cheap nuclear power generation. Number 8. Southern Co. Dividend yield 4%. Southern Co., another prominent power utility, operates primarily in southern states such as Tennessee and Georgia. The company has a long-established history of benefiting from favorable regulatory environments and robust local economies. Currently undergoing a massive overhaul of operations, Southern Co. is investing over $40 billion in its capital investment plan to prioritize clean, carbon-free energy. Historically reliant on coal, the company has successfully reduced coal's contribution to less than 20% of its power generation, with nuclear power picking up a significant portion of the slack. Despite initial cost overruns in its nuclear program, Southern Co. is reaping the benefits as more nuclear units come online. Like Duke Energy, Southern Co. is poised to enjoy an expanding valuation ratio as investors recognize its favorable generation mix. Additionally, falling interest rates are expected to provide a tailwind for utility companies, resulting in lower interest expenses on their debt loads. Number 7. United Microelectronics Corp. Dividend yield 7.4%. It is the world's third-largest semiconductor foundry, trailing only Taiwan Semiconductor Manufacturing Co. Limited and Global Foundries. Semiconductor companies that do not own their own foundries outsource their chip production to companies like UNC. Given the rise of artificial intelligence applications, the Internet of Things, connected cars, and other emerging technologies, the demand for semiconductor components has surged. Its generous dividend yield of 7.4% stands out in the tech sector, where significant dividends are not the norm. While there may be concerns related to market fluctuations, its solid position in the semiconductor industry and attractive dividend yield make it a noteworthy consideration for income-focused investors. Number 6. Washington Trust Bancorp Incorporated. Dividend yield 7.7%. While larger banks are often considered for dividends, smaller regional banks can present stable investment opportunities. Washington Trust Bancorp, founded in 1800 to serve emerging mills along the Potomac River, has a rich history and unique positioning. Washington Trust Bancorp has faced challenges in recent times, notably in its mortgage underwriting business, which experienced a slowdown amid higher interest rates. However, with expectations of interest rates coming back down, the bank's earnings should rebound in 2024. As of now, Washington Trust Bancorp yields an impressive 7.7%, and its dividend is fully covered by earnings. Investors seeking stability and a robust dividend in the banking sector may find Washington Trust Bancorp to be a compelling choice in 2024. Number 5. ExxonMobil Corp. Dividend yield 3.9%. Oil stocks faced a challenging start in 2024, with concerns about an economic slowdown and falling demand leading to a sell-off in the sector. ExxonMobil, one of the largest integrated energy companies globally, is not immune to market fluctuations, but its fundamentals remain robust. Amid fears of a slowdown, the demand for energy resources, including oil and natural gas, remains crucial. ExxonMobil, selling near 52-week lows, presents itself as a relative bargain compared to the broader market. The company's diversified operations, combined with unusually cold weather in much of the U.S., contribute to an optimistic outlook. ExxonMobil's dividend yield of 3.9% and the potential for a rebound in the energy sector make it an attractive option for income-oriented investors. Number 4. National Storage Affiliates Trust. Dividend yield 6%. It operates in the real estate investment trust sector, focusing on the fast-growing self-storage market. Established a decade ago, it is one of the newer large self-storage REITs. With interest rates starting to decline, REITs like NSA are poised to benefit from a more favorable macroeconomic outlook in 2024. The self-storage industry tends to thrive during economic downturns, as people move due to foreclosures, changes in employment, and other recession-related factors, leading to increased demand for storage units. NSA's dividend yield of 6% and potential for growth in a softer economy make it an interesting choice for income investors seeking exposure to the real estate sector. Number 3. Realty Income Corp. Dividend yield 9%. Realty Income Corp is a triple net REIT, a type of real estate contract where the tenant, rather than the landlord, bears the costs associated with the property. Known as the monthly dividend company, Realty Income has not only paid a monthly dividend, but has also increased it for 26 consecutive years, earning the designation of a dividend aristocrat within the real estate sector. The company has strategically positioned itself in the market, focusing on properties such as retail, commercial, and industrial spaces. Despite facing challenges in recent times, including the impact of remote work on office spaces, Realty Income's commitment to monthly dividends and its impressive track record make it a resilient choice for income investors. With a dividend yield of 9%, Realty Income offers a substantial income stream that has stood the test of time. Number 2. Moomoo Group. Dividend yield 3.2%. Moomoo Group, primarily a life insurance company, also offers additional policies such as disability and accident insurance. While the life insurance sector faces challenges, Moomoo has positioned itself to navigate industry trends successfully. The company's focus on innovative solutions, including policies related to chronic illnesses and diabetes management, presents a potential growth avenue. Analysts have identified Moomoo as one of the top financial picks for 2024, given its compelling valuation and the potential for high returns. With a dividend yield of 3.2%, Moomoo offers income investors an opportunity to participate in the life insurance sector's potential resurgence. Number 1. British American Tobacco. Dividend yield 9.6%. It is one of the world's leading tobacco companies, facing the challenges associated with a declining tobacco market. However, the company is strategically shifting its focus to reduced risk products, such as e-cigarettes, as consumers increasingly seek alternatives to traditional cigarettes. Despite the declining trend in cigarette consumption, sales of reduced risk products are on the rise, positioning BTI for a profitable future. With shares trading at a low forward earnings multiple and offering an impressive dividend yield of 9.6%, British American Tobacco presents itself as a potential value play. Investors willing to overlook the declining cigarette market and focus on the company's future in reduced risk products may find BTI to be an attractive income-generating investment. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.